Thank you very much. Callum mentioned Japanifications a few times, and certainly Japan has gone through a very long period, many years, as you guys will know, of low growth, low inflation, low interest rates. Many global investors have given up on the market, thinking it's sold, it's unexciting. But I would argue, actually, Japan offers really some interesting opportunities for those, willing to maybe turn a few rocks around and discover hidden gems. There is innovation, there is IP, there is global players as well as niche small companies. So please, welcome on stage Sophia Li, Portfolio Manager at First Century Investors, who will tell us a bit more about how she spent the last 10 years.
Thank you everyone for your time today, and thank you Lorenzo for giving me this opportunity to present the unique investment opportunities that we find in Japan. And when I think about Japan, often there are three words coming to my mind. One is it is misunderstood, and then second, it is under-researched, and then thirdly, it is underappreciated. I think for the global investors, when they think about Japan, as Lorenzo mentioned, we often think about the country as having no growth and having low return, and also there has been a gradual loss of the global competitiveness due to the aging population, which we actually humbly disagree. In fact, for many years, Japan has been maintaining a remarkably strong position in the R&D globally and also the intellectual property rights. Japan has been constantly actually having the #1 market share in the triadic patent families in the world. And it also is one of the top R&D spenders in the world. And another key indicator we look at is the economic complexity index, which is used to measure the value added of the products that a country make, and also the resilience of the externally facing economy. And Japan, in fact, has been the leader in the world for many years in terms of the economic complex. And then last but not least, despite the aging population, the labor productivity in Japan has been on par with the United States in the past 50 to 60 years. Secondly, Japan is also the most under-researched market among the major global equity markets. As you can see on the chart here, actually more than 70% of over 4,000 listed companies in Japan are covered only by one analyst or have no coverage at all, which is the opposite of the United States. So given this high level of market inefficiency, I think it looks quite exciting to the active investors because it provides a very large pool of the hidden gems for us to discover before they are well appreciated by the market. So what are the key major investment themes that we identify in Japan? And then today I will mainly focus on the 4 investment themes in our portfolio. So first of all, actually, Japan has a very large number of the companies that have dominant global market share in the niche industries, which has very limited competition and is also protected by very high barrier to entry. As a result, for these type of companies, usually they have very strong pricing power. They generate sustainably high return on capital employed, and also generate reasonable, medium-term growth backed by the strength of their franchise. So one key area where we find many investment ideas is the semiconductor equipment and also material industries, and which I will elaborate later after this slide. The second investment themes in Japan is the multi-year trend of digital transformation. Digital transformation not only applies to the fact that the companies need to spend more on IT spending to upgrade their proprietary IT system, but also they need to accelerate their pace in terms of upgrading to the cloud services and also the software. Lastly, Japanese companies have been lagging behind the United States States in terms of the digitalization of their business model. And the government actually is very well aware of these problems. So back to 2 to 3 years ago, actually the government has set up the digital agency in order to make more initiatives to push the Japanese companies to adopt digitalization. And I will talk about more investment opportunities later. And then thirdly, as I just mentioned, because of the lack of coverage of the stocks in Japan, and there are many attractive mid to smaller cap companies which have very strong franchise, very interesting business, but their valuation is below the comparables in the large cap space. And this is also an area for us to generate investment ideas. And then last but not least, we also maintain a balanced approach, and we also invest in a number of large cap, globally competitive companies positioned in various kind of industries, such as like entertainment, factory automation, and also medical equipment. So yeah, this slide is about the opportunity set we find in Japan in the semiconductor market. As we know that the strategic value of semiconductor has been continuously rising in the past 10 to 15 years, especially after the supply chain disruption caused by the COVID. If you look at the semiconductor content in a car, so it virtually will double if you compare an ICE vehicle and also electric vehicle. And then another example actually is the AI. As you know, that semiconductor is enabler of advanced AI GPU chips. And as a result, companies which are positioned in the cutting edge semiconductor industries will be the major beneficiaries. If we look at the chart on the left-hand side, as you can see here, for so many cutting edge technology and products, Japan has the dominant market share in the world, more than 80–90%, and for some technology is close to 100%. And then in our portfolio, actually we invest in a number of hidden gems in this area, which is not very well known among the global investors. For example, one company is called Ajinomoto. This company actually invented ABF, which is a very important type of insulating material applied to advanced packaging, which is used to make CPUs and also AI GPUs. And as a result, the company is a de facto standard in the world, and they have 100% market share. And for this product, they generate more than 50% operating margin. Another example is a company called TOK. So this company is the second largest semiconductor photoresist manufacturer in the world. Actually, semiconductor photoresist is a very important type of material, and actually top five Japanese companies have more than 90% of the global market share. And for TOK, they are the second largest with about 25% market share. And then one more example is a company called Fuso Chemical. This is another global monopoly. It is small cap. The company doesn't really publish any English presentations and so forth, but they actually have 100%, again, 100% market share in a type of chemical called high purity, ultra high purity colloidal silica, which is used to polish the semiconductor wafers and also used in the CMP slurry materials. So all of these companies, actually, their valuation is quite attractive. So for some of them, it's only about like 10 to 12 times PE, and they are not really well known in the market. Then this slide is mainly about the digital transformation. So despite the strong need for digital transformation in Japan, but the country has suffered from the severe labor shortage of talented IT engineers. Because of the historical background of the Japanese society, so actually only 30% of the IT engineers are working inside a company, while in the United States it's more than 70%. That means that for the large Japanese companies, they have to rely on system integrators, large IT service companies in the country, to hold their hands and then build up their IT system and tell them what are the next cutting-edge tools to use. So as a result, the key beneficiary of the accelerated spending on IT will be a strategic and IT consulting company, which help a company to rebuild their business model and also their internal system. And another example would be the leading IT services companies, because they can benefit from stronger pricing power and the more orders in the years to come. One of our top holdings is a company called the Bay Current. So this company is one of the largest IT and the strategic consulting company in Japan. And their business model is a bit like Accenture and also McKinsey in the Western world. So for this company, they have delivered more than 30% CAGR growth in the past many years. And they, thanks to strong orders from the large blue chip companies to transform their business model. Operating margin, ROE of this company is also top-notch in the world. And another stock example is a company called Shift. So Shift is actually a relatively, newcomer to the industry. So they mainly handle the outsourcing services of software testing for the Japanese large enterprises and IT services companies. Because of the labor shortage in the country, so there is more and more outsourcing works from the IT services companies, and then Shift actually can automate this process based on their AI software and so forth. So, and one more interesting about this company is that actually despite the relatively small size of this company, because of the charisma of the CEO and the founder, he managed to hire the ex-CEO of Keyence, which is a leading global machine vision system company in Japan, to become the vice president of the company. As a result, the company has been actually building up their HR system, sales management system, and so forth. And the growth has been phenomenal, actually, in the past many years. Thirdly, I would like to talk about a couple more hidden gems in Japan that we find. And most of these companies are barely covered by the market, but they have very interesting business and also strong franchise. So first of all, this is a company called Roland. So if any of you would have a hobby of playing electronic drum at home, I think more than 70% chance that you may have a Roland branded electronic drum. This company actually has a very long-term history. It is highly innovative. They have managed to invent many of the industry first products in the electronic instrument industry. So they have more than 65% global market share in the electronic drum, and they actually provide a full lineup of electronic instruments such as digital piano, wind instrument, and so forth. And actually the barrier to entry for this industry is quite high, because the company actually has the proprietary technology of designing their own semiconductor chips to simulate the sound environment under different kind of external factors. So for example, they can simulate the sound quality in like big music hall versus like at the suburban areas. So it's complete different actually sound effect. And the company is one of the only 2 companies in the world that have possessed this technology. Partially also because it's not a sexy industry, so there's a limited competition. And the result, the company enjoys very strong pricing power. Another company is called Shoei. This company actually has more than half of their revenue exposure to Europe, and then they are the leading manufacturer of a premium motorcycle helmet with more than 60% market share. So the company is very focused. So they're very passionate about motorcycle helmet. Obviously, the more fancy the shape is, actually the harder it is for the product to pass the regulatory approval. But the company keeps challenging it. So that's why they have the top global market share in the motorcycle helmet industry. And then for these companies, actually, despite their strong track record, franchise, sustainable growth, but because of the lack of reputation in the market, actually the valuation is very attractive. And then lastly, in Japan, among the large cap space, we also invest in a number of companies that have transformed their business model to become quite globally competitive. A good example would be Sony. I think maybe back to 10 or 15 years ago, you would consider Sony as a house compliance manufacturers, and they've been losing to Apple and the Chinese manufacturers in the smartphone, TV, and so forth. But on the other hand, in the past 10 years, Sony actually has already restructured the business itself, and now they mainly focus on two businesses. One is the entertainment industry. Sony is the largest game console manufacturer in the world, with more than 40% market share and competing with Xbox. And then secondly, the company also runs the top music streaming, music publishing company in the world, and also their movie business is also one of the top 5 in the world. So in overall, actually more than 60% of Sony's profit today is from the entertainment business. And then another key business of Sony is the CMOS sensor. So every year when we expect the launch of a new iPhone, the major change actually is the camera quality. And actually it's all empowered by Sony's CMOS sensor. The company has more than 50% global market share in the CMOS sensor, and they virtually has a monopolistic market share within Apple. And the next growth driver for the CMOS sensor will be applied to autonomous driving. As you can imagine, we need a lot of high quality and robust sensors for the future cars to make their own decisions. One more company I would like to spend some time is a company called the Recruit Holdings. We also have invested in company for a very long time. So Recruit is a global leading HR and the marketing media company. And the company's historical business model is online job board. But the company already witnessed the transformation of the business model in this industry. In the future, and even today already, employers are no longer to be willing to pay a fixed fee for a job advertisement to be listed on their website. They want to pay for performance. They want to hire people at the fastest pace with the smallest amount of money. So as a result, Recruit actually made a very good acquisition more than 10 years ago. And now today, they own the largest job search engine in the world called Indeed, which has #1 market share in the United States. And that they also have the top franchise in some of the developed markets like Germany and also UK. So I think Recruit is a very good example, which is opposite of the typical Japanese companies. So basically, the management told me that if we know that one day we will be displaced by another competitor, a new business model, then we would rather displace ourselves first. So as a result, the company made a very smooth transition to a new business model. And then the Olympus, it will be very quickly. This company is a global leader in the gastrointestinal endoscope. It's another very niche market protected by high barrier to entry. And then the company has more than actually 70% market share in this industry. And then lastly is Keyence. Keyence is one of the largest machine vision sensor manufacturer in the world with more than 25% of market share. So these are just some of the examples of the top global franchises that we discovered in Japan. And then lastly, I will probably use 2 company examples to illustrate what's our investment process and what kind of the key opportunities we find in Japan. So I briefly mentioned about Ajinomoto. So this company is a very interesting story. So basically, they are a very traditional and historical seasoning and condiment manufacturer in Japan. Basically, it was a food company many years ago. But in 1990s, when Intel tried to transit their technology to the advanced packaging substrate, so they tried to recruit a material manufacturer. And Ajinomoto actually applied their technology in the seasoning market to semiconductor. And as a result, they become the monopoly of the ABF, which is a very important semiconductor material. And today they have 100% market share. Actually, for ABF, the key growth driver is the HPC, the data center. As you can see that the data center growth will be phenomenal in the next 10 years, mainly driven by the AI training and the inference functions. And for ABF in 2020, already more than 60% of the demand is from servers, data centers. And then by 2030, actually will be contribute to more than over 80%. So the company actually is a major beneficiary of the strong growth of a data center. On the other hand, the company is also a very good case of restructuring in Japan, because in Japan we can find many good franchises, but they were mismanaged by the management because they tend to be relatively stubborn and also inward-looking. But for Ajinomoto, since a few years ago, so they have the new CEO, and then he started to restructure the company and then focus on improving the overall ROIC of the company. So as a result, the ROIC of the company has improved from 3% in 2019 to more than 10% now. And they actually aim to double that by 2030. In the meantime, they also want to triple their earnings per share in the next 8 years. And also, they also commit to paying out more than 50% of their total profit in a combination of dividend and share buyback. So basically, Ajinomoto is a role model of the corporate restructuring stories in Japan. And since Japan is a very homogeneous society, if we have more and more this kind of role models, the rest of the peers will follow. And that's why we believe that ROE in Japan can structurally improve from here. And then the last company example I will present today is a company called LaserTech. So this company is a global leading semiconductor equipment manufacturer, and they are very good at mask blank testing equipment. So for this company, although it's a relatively small company, they have less than 900 employees, almost only less than 1/10 of their global competitor, KLA, based in US. But the management is very visionary. They already foresaw the upcoming EUV era, so the extreme ultraviolet technology used for advanced semiconductor. As a result, they worked with the global leading semiconductor manufacturers like Samsung and also TSMC to develop the EUV related equipment. So nowadays, the company has, again, virtually monopolistic market share in the EUV mask blank and the photo mask inspection system. And the margin of their product is superior. ROE of the company in the latest year is over 50%, and their order backlog also virtually doubled, as you can see on the chart here. So this is, again, a very good example of a hidden gem in Japan, which used to have very small size, but they are able to beat their global competitor thanks to very superior labor productivity. Yeah, so I think this will be the end of my presentation today. I hope that my presentation could add some value to your understanding of Japan. And then if you have any questions, please let me know.